In this lesson, we're going to look at the chart of accounts. I will go ahead and point out the basics of the chart of accounts, kind of work through that. Before we get into that though, I do want to make you aware that when you start up for the first time in QuickBooks Online, they have an interview process. During that interview process, they ask about the industry or close to the industry that you're in, and they're able to generate a basic set of chart of accounts for you. Those will show up then in your QuickBooks Online account. Now in the next lesson, we're going to really dive in how we can add specific accounts that aren't showing up in your basic chart of accounts. So let's go ahead and dive into this section here. Again, we're on the main screen. Get things done. We are in the business view. I will show you real quick how to get to the chart of accounts in both the business view and the accountant's view. Here in the business view, it's over here to the left under bookkeeping. It comes up immediately to your chart of accounts. If it doesn't, you can always toggle over here, find your chart of accounts and go to it. Now I'm going to go ahead and switch over to the accountant view here real quick and show you where you can find it in the accountant view. So if we're on the dashboard, as you come in, down on the bottom here, it's accounting, and you can either do chart of accounts or reconcile. So we would just click on chart of accounts and it brings it up here. Notice QuickBooks does give you the amount of chart of accounts that you are utilizing at the moment. Remember, we looked at that earlier in the usage lesson, that QuickBooks allows you to have up to 250 accounts in your chart of accounts, unless you're in the advanced, where they'll give you the option to do unlimited amounts. So I'm going to go ahead and switch back over here to the business view and then go into our chart of accounts. And right away, you notice here that we have our basics to our chart of accounts. Again, QuickBooks sets up a basic one. Since we have linked bank accounts, then those show up here. You notice that there are two arrows pointing in either direction. This means that we have actually connected our account. So if your checking and savings account's not connected, then this won't show up under type or detail. And over here to the right, you won't have a bank balance. Right here, you notice on our checking account, we have a $1,200 balance in QuickBooks, but on the bank balance, on the feed, it comes across as negative $3,000. What that is probably there are transactions sitting on our bank feed that we will need to go ahead and confirm. If after all of that happens and there's still a difference, it just might be that there is a day lag from your bank to QuickBooks. Maybe there's some transactions out there that aren't hitting yet. I wouldn't be too concerned about that as long as you have all of your transactions confirmed. Now, as we kind of go down through here, I'm going to explain a little bit about the basics of chart of accounts. They are set up in a logical order for accountants here. And what you have to start with are your bank accounts. These are your current assets. And so every chart of accounts, the first thing you see will be your bank accounts. Then after your bank accounts, you'll have other current assets, which could be your receivables, your inventory, maybe some prepaids. those will show up down here under other current assets. Now, notice here that it has a type of accounts receivable and a detailed type. Understand this is a account that QuickBooks generates. It's part of the accounts receivable ledger, which is its own module in QuickBooks Online. You can't eliminate this account. It'll always be there even if you don't use it. But it's good because in reality it's its own separate database, and we want that to happen that way. So as we kind of go down through here, you have your other current assets that you can create or eliminate, and then we get down to what are called fixed assets. Now, fixed assets are what you would call your depreciable assets. Those that do the taxes know that there are certain assets that you purchase for the company that can be depreciated for tax purposes. Typically, it's anything over $2,500. Some accountants will have a lower figure, some of them will have a higher figure. I tend to work with anything under $2,500, I would expense out. Over $2,500, I would consider it an asset. So fixed assets can be vehicles, they can be office equipment, computers, furniture, they can even be improvements to, say, your leased facilities, or they can be building improvements or purchases of building. So that's going to show up here in your fixed assets. Now, if you have something beyond that, you could have what they call long-term assets, which you can create down here. Those will be items such as, say, deposits or intangible items such as goodwill. They would show up in your long-term assets. Long-term just means anything greater than 1 year. Current, under 1 year. Long-term, greater than 1 year. So that's our assets. Assets always show up first on your chart of accounts. Now we move into the liability section of your chart of accounts. Again, starts out with your current liabilities, which the number one would be your accounts payable. Again, QuickBooks has its separate ledger for accounts payable. It's its own module, and you will not be able to eliminate this. This will always show up in the chart of accounts, whether you use it or not. If you don't use it, obviously this will show up as 0. Then you will have, say, your credit cards that you have linked or non-linked credit cards. Again, if you've linked them, you'll see the little arrows here. It says that this account is linked. Over to the right is your bank balance. To the left here is your QuickBooks balance. You can also set up other current liabilities such as payroll liabilities that are owed to, say, the state and federal. You can set up maybe short-term loans that you have, and again, current, less than a year, long-term, greater than a year. Then we move on to our long-term liabilities here, where you can set up loans that are greater than 1 year. And again, this number showing up here should be your principal amount. If you are running your transactions correctly, every payment will have a principal payment and an interest payment as part of the whole amount. And if you set that up correctly, then this will decrease with your principal payments on your monthly payments, quarterly payments, weekly payments, however time frame that you have on those payments. That's our liabilities. That's always the second items that are featured in your chart of accounts. Then we move on to our equity line items. And again, equity line items could be set up based on the type of entity you are, whether you're a corporation, a partnership, maybe a sole proprietorship. These equity accounts can be set up specifically for that. Now, QuickBooks has a default account. It will always be here. You can't eliminate it. It's called opening balance equity. QuickBooks uses this account when you connect up accounts, and this will show up here. It will always go against your equity account. I tend to like to keep this at 0 and then use other equity accounts so that I run those on my balance sheet based on that. So if a lot of times I might set up a reconciliation equity account just so I can keep this at 0. However, just know that this is a default account within QuickBooks. Again, I can set up equity accounts, say like owner's equity capital. Maybe you put money into the company, so that could be investment into the company. I could have an account set up here for that. If you distributed money from the company, you could have a distribution account here. For corporations that may have treasury stock, you can set up a treasury stock account all within your equity line items here. So that is the equity portion. Then we move into our income accounts. And our income accounts are very specific to the type of industry you're in. QuickBooks sets up basic ones. So you got service and fee income. You might have some discounts, and then you have some other items down here. In my sample company here, I've set up some specific accounts, so those are showing up right here under the income line items. Again, chart of accounts goes through a sequential order. After equity comes income. You can set all of that up here. Then we move into our expense accounts. This is the probably the most transactions and accounts that you will have within your QuickBooks environment. And it can be as many as say 100, or you could have just very specific accounts and only do a few. Again, as long as you keep it under the 250 accounts, then you can set up as many expense accounts as you want. Again, down here, you can set up sub accounts. Say for instance, you had job expenses and you wanted to set up certain ones underneath it. Let me go back real quick here before we move down here. I did skip. There is a series of accounts that come after the income and before expenses. This is if your company is tracking what they call cost of goods sold, or maybe cost of sales. Then these accounts will show up under cost of goods. QuickBooks generates a generic one always with supplies and materials, and then you can add on from there. Real good if your company is tracking certain expenses that come off of your profit to get a gross profit before your operating income and expenses. So here's where you can set up all your expenses, and then we get down to what they call other income and other expenses. Other income is things like interest income, maybe dividend income. It's other income that typically are not part of your operating. When they had the PPP loans, the income from that usually showed up here under other income. Other expenses are items such as depreciation or amortization, and that would show up under here, other expenses. You may have penalties or settlements from lawsuits that aren't typically part of your operating expenses. Then you would put them down here under other expenses. So that's the basic format of chart of accounts. Again, you start with your assets, current, then you move into your fixed assets, followed by your long-term assets. Then you move into your liabilities, current and long-term. Follow that up with your equity accounts. And then we get into your income and expenses. Income's always before your expenses. And if you are doing cost of goods, then you'll have cost of goods prior to your actual expense accounts. And then at the end of any chart of accounts, there will always be other income and other expenses. So that's the chart of accounts, kind of a basic overview of what they are. So now we're going to go ahead in our next lesson and really get into setting up a specific, say, income or asset to your chart of accounts. Make sure that's set up correctly so that you can run the reports that you need that are very specific to your company.
I gotcha.